Roy Smith is our grain market analyst this week. There was a big shift for Nebraska in this week's U.S. Drought Monitor from UNL. For the last 5 weeks, the state had held steady with 3/4 in no drought category and about a quarter listed as D0 or abnormally dry. But Thursday's release moved a large portion, enough to leave only 37% in D0. The 2% now listed as moderate or D1 in drought severity is the most since August, and the 62% in D0 to D4 classification is the most since July. Later on in the show, Nebraska Extension State climatologist Al Dutcher will take a look at current situations across the state. Corn and soybean markets finished poorly Monday and Tuesday, but put in a positive day when we talked with Roy Wednesday afternoon.
Well, the markets the last week or so, actually since about the 1st of March, have really been depressed. I hate to say things like that, but we had an incident there with the Brazilian trucker strike that really was a catalyst for causing some pretty strong corn and soybean markets, soybeans especially in February, and about the time we thought that the market had a head of steam, why the trucker strike was solved, and we've been pretty much down every day since then, except for Wednesday of this last week we had a good day, and so hopefully maybe that'll turn the market around.
Fundamentally, does everything remain the same?
Nothing really has changed fundamentally. We know that Brazil's got a crop in the field or being harvested, and that's going to come to town. I guess the thing that really concerns me, 2 weeks ago I was at Commodity Classic in Phoenix, and boy, you take a poll of farmers at a meeting like that, and there's an awful lot of corn that's in the bin and not priced. And you know, I guess you have to pick your time when you're going to sell something like that, but it could get hard to do there if we don't get some of that moving right soon.
Was one of those farmers Roy Smith?
It might have been, yeah. I pretty much got rid of all my soybeans, but corn's still in the bin in good condition, and we just haven't had much of spectacular go on in the corn market. In the soybean market, we had one of the best dead cat bounce moves in history, and right on time for everybody that watches that. They had a chance to get some beans moved on some very attractive prices, but corn's kind of been dead in the water. But now we've got new crop futures with a little bit of optimism, and hopefully we can turn that into some profit down the road.
What's the game plan for those farmers that still have that corn?
I think that you look at a day like last Wednesday when the corn was up 3 or 4 cents, soybeans up a dime, and we had a couple days like that the previous week, and put some orders in with your grain merchandiser so you don't have to watch it, and set them wherever you think is reasonable, at 10 cents, 15 cents, 20 cents above the market, and put a time delay on them so that if we don't get there, you get it sold. But the thing that we really want to stay away from is that's holding this old crop corn into the next fall, unless you're willing to hedge it. If you're willing to hedge it, you can hedge in some storage profit, but it's not a spectacular deal. It's just a few dollars.
When we talk with you, a lot of times we talk about the historical trends of prices. Are those still following along, or have they now broken? Up
until this last big move in the market, those trends have really held together well. You know, I track my long-term seasonal trends from the 1st of May to April 30th of the year before, and from the 1st of May until about 2 weeks ago, they just fit the pattern almost perfectly. And you know, I have a little spec account that I use to try out my strategies, and it has done very well since last spring up until just this last week. And so don't give up on the seasonal price trends yet. If you look at those long-term charts, you see beginning in the winter, you see a gradual upslope going higher, and usually basis improvement as well. I'm not sure this year we're going to get that basis improvement, but hopefully we can at least get back to that gradual uptrend that we normally see.
How do you approach the reports on March 31st on prospective plantings and grain stocks?
Actually, without much interest. To be honest with you, we've already got some guesses built into the thing. The last report we had was a little friendly for soybeans and maybe a little less friendly for corn, but the corn already had some positive fundamentals built into it. So, right now, or end of March or whatever timeline you want to use, the weather from now until planting time, the attitude of the farmers between now and planting time really has no effect on what the harvest turns out to be. In fact, before you came here today, I was just looking at some of the data that showed that about a 40% probability that the market's going to do what we think it's going to do, and about 60% probability it's going to do something else. So you need to be real careful. I still flash back to place your bets based on cash flow, because cash flow is what keeps us going.